friends, today let's talk about how long to keep important paperwork, right? Now, knowing what to keep and for how long can be a bit challenging, right? Wouldn't you say? Managing all the important paperwork for one household is confusing enough, but things can become even more complicated for family caregivers who also have financial and medical power of attorney, right? And they help oversee their loved ones' files too, besides their own, right? So to help caregivers cut down the paperwork and create a straightforward filing system, here are some general rules for the most common documents, right? So you have tax returns and supporting documentations, right? Anything to do with taxes should be kept for at least 7 years. The IRS has a 3-year window from your due date to audit your tax return if it suspects good faith errors, right? You also have the same amount of time to file an amended return if you find you made a mistake, right? However, the IRS has a 6 years to challenge your returns if it thinks you underreported your gross income by 25% or more, right? Specific items you should keep in addition to your tax returns themselves include documentation of income, alimony, charitable contribution, mortgage interest, retirement plan contributions, and any other tax deduction taken, right? Another document is medical bills and health records. Keep all medical bills and supporting documentation, such as cancel checks or credit card statements, until you are sure that the bill has been confirmed as paid in full by you or your insurance company. If you are deducting for unreimbursed medical expenses in your tax return, keep all supporting documentation. Remember to keep all related bills, right? Including dental, vision, hearing aids, and over-the-counter medication, etc. Another document you want to keep is retirement plan statements. Keep your quarterly statement until you receive your annual summary document, right? If everything matches up, you can then shred the quarterly statements, right? Hold on to your annual summary until you close that account, right? Another document you want to keep is your IRA contribution. If you made an after-tax contribution to an individual retirement account, you will need to keep your statement regarding these contributions indefinitely. Otherwise, you won't be able to prove that you already pay tax on this money when it is time to make a withdrawal, right? And without careful record keeping, you may risk paying unnecessary taxes on distribution that should be tax-free. Another document is your brokerage statement, right? You must keep these until you sell the securities covered by them to prove whether you incur capital gains or losses for your tax returns. If you hold stocks or bonds for many years, you will need to keep the statements, right? Now, another document that you want to keep in case, wait a minute, hold on, I'm going blank. Another document is what you call it, bank records, I'm sorry. Keep any checks or statements related to your taxes, such as business expenses, home improvements, or mortgage payments for at least 7 years, right? Another document is bills. Keep bills until you receive the canceled check or credit card statement showing that your payment was received. And be sure to hold on to receipts for big purchases like jewelry and furniture, art, appliances, automobiles, and electronics so that you can prove the value of these items to your insurance company in the event they are lost, stolen, or destroyed in a covered disaster such as a fire, right? Another document is home ownership documents. Keep all records documenting the purchase price of any property, the cost of all improvements, as well as records of expenses that you incur in selling and buying property for 7 years after the sale or purchase, right? Reconciliating credit card receipts and statements, that's another document. Keep original receipts until your credit card statement arrive and then go through the charges one at a time to ensure they match. You can then discard the receipts. Now, if your statement document any tax-related expenses, you want to keep those for 7 years. Another document is paycheck stub. Keep your paycheck stubs until you receive your annual W-2 form from your employer and make sure the information matches. If they don't match, request a corrected W-2 from your employer, right? However, be careful about getting rid of original paperwork. Don't throw away anything unless you are sure you can obtain another physical or electronic copy of a record from the bank, your insurance company, doctor, your employer, right, etc. And also remember, you can obtain many of these documents in a digital format, or you can scan the hard copies and archive them electronically, right? Now, if the task seems overwhelming, daunting, you might want to consider enlisting the help of a daily money manager, right? Now, to learn more about how a daily money manager can help, come join us August the 10th, right? We're having an event. We'll be having a money manager there. Ask your question. Come with your questions. Ask your questions to that daily money manager. I'll add the link to the event in this video. Thank you so much for watching this video. We hope you can come join us August 10th and talk with our daily money manager, who will be our main featured speaker then, okay? So thank you for watching this video. I'm your dedicated senior advocate. Have an amazing day. Bye-bye.